Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a rainy morning here in Mumbai. It's a Thursday morning, and it's leaking a little bit as far as markets are concerned. So US markets taking a bit of a dive last night. So I think that's got to be the number one talking point. And it's not driven by equities. It's driven by what's happened in bond markets. I'm Prashant. With me, my colleagues Nigel and Rima is with us today. Guys, morning.
Hi, morning. That's the big theme, right? Bond vigilantes have woken up and they've pushed the yields much higher, 5% plus on the 30-year.
Well, we got plenty of market action to talk about, but just for a minute, wanted to focus on the IPL yesterday. Mumbai Indians qualifying for the playoffs. I was very, very happy. I was at the stadium with my kids and my wife, and
no wonder your voice is gone.
That unbeaten record continues. Whenever I've gone to the stadium, Mumbai Indians has won. So I would like to think that I'm the good luck charm. So, but what a win. What a win. The boys are on top of it. Played a little slow at the start of batting, finished it with a flourish, and then came in and knocked off all the 10 wickets. So good and pumped up, but we've got the markets to talk about.
Absolutely. And, let's hope that the market also is able to turn the corner at some point, because the start is, of course, going to be slightly lower. So let's take it from the top, right, in terms of what you need to know as we begin this session. I'll start with, of course, just the price changes on the equity side. The S&P down about 1.6%, the Nasdaq down about 1.5%, and the Russell 2000 down 3%. So that's the overnight cuts across Wall Street that we saw. Now, straight away across the US yield curve, the 5, 10, 30, the 5-year was up about 8 basis points, the 10-year 11 basis points, and the 30-year hit 5.08. Actually, I think at one point it hit about 5.09. It was up 12 basis points on the 30-year. And this is essentially what led to equities coming under pressure. So there was a 20-year auction which was weak. I think it was the total quantum was about $16 billion or so, but it was a 20-year bond, and it was in a way underfunded, undersubscribed. I mean, it was quite weak, and that essentially raised risks of, once again, the fact that the bond market, what has been described by many, maybe a little extreme, as a buyer's strike. That the U.S. fiscal situation is bad, and people essentially want to be careful about not committing too much, and they want to diversify away from U.S. assets, bonds, of course, in this particular case. And I already kind of outlined the reaction. Yields shot up, people demanding much more to come in into U.S. bonds. That's the point. The 10-year, by the way, if you just look at what's happened since the beginning of May, it's up 47 basis points. It was on the 1st of May, it was 4.12. And now it's 4.59. That's 47 basis points in May so far. The question, as we always ask, is at what level do bond yields start to hurt equities? The simple answer, of course, is the psychological 5% number. If the 10-year goes to 5, I mean, I think expect a bit of a sell-off, etc. But I think it's now also widely acknowledged that it's not just the level on the yield, I mean, on the 30 or the 10 or the 5 or the 2 for that matter. It's the pace of the move and, how fast bond yields move. And in that sense, we're already up in short order, 47 basis points. And if you do more, I mean, just the pace itself, and you don't necessarily need to get to 5%, I mean, can start to hurt and start to do real damage as far as equities are concerned. So keep this in mind. By the way, it's interesting. What did we start this week, Monday, with? We started with that S&P downgrade. We started with news that on Sunday that that one big beautiful spending bill has passed. So in a way, if you want, you can read this as a bond market warning to not overspending. I mean, Trump and team have been promising to contract the fisc, not expand the fisc. But as the latest bill shows, I mean, there is no contraction, there is expansion. This latest bill, by some estimates, will add over $3 trillion to deficit by 2034. So there is no contraction. And, all of this, of course, needs to be seen in that particular context. Now, just to look at some of the other things, dollar index was down about 0.5. Oil prices were down about 1%. There was also some inventory data, apart from, of course, what happened. Otherwise, precious metals were strong. Gold, it had, it had swung down to about 3,100. It's back at about 3,300. Bitcoin briefly hit a fresh all-time high. That's broadly the picture that you want to pay attention to. Now, just to circle back and look at the levels here, important to look at levels on the downside. I mean, yesterday the market did a little bit, 0.5% or so, but not on a very strong and sure footing. It kept sort of waxing and waning through the course of the day. The 20-day moving average at 24,150 will be the important downside level on the Nifty from here. We are at about 24,800. So there is some distance to go. On the upside, 25,116 is the level to take out for the Nifty, for the market to pick up some momentum. Nifty Bank is close slightly above the 20-day moving average yesterday, but it's just a little confusing. I mean, how much should you read into it? It's only marginally higher above it. So the swing low on the downside at 54,690 is the important level to watch. And then the other downside levels, if this swing low goes, is 54,031, which is the lower Bollinger Band, and the 40-day exponential moving average, which is 53,505. So these are some levels and some indicators, etc. GIFT Nifty will come up on your screen, and I think it will give you a sense of how we start. It's about 60, 65 odd points lower at this point in time. Rima.
Hi. So Asia is also paying attention to the rise in the US bond yield. So across the board, whether it's the Nikkei market, Kospi, they're paying attention, they've taken note, and they're tracking the losses on Wall Street. So 1% gone on Taiwan. Nikkei is also down 1%. Hang Seng is lower by nearly 0.5%. So that ripple effect is seen across all markets. In terms of flows yesterday, while we did clock in just a 0.5% gain, the FIs bought pretty okay. So 2,200 crore bought by the FIs in the cash market yesterday, while the DIIs net bought nearly 700 crores. So it's good to see both institutions buying in our market. So what's on the deck? Two big earnings. So one is IndusInd Bank, and they've reported worse than feared net loss of nearly 2,400 crore rupees. But Interglobe Aviation is flying in bright skies. So very strong domestic demand has driven a big profit of 3,000 crore rupees. So mixed bag. IndusInd Bank on the way down and Interglobe Aviation on the way up is what you need to watch. Earnings today, ITC, Sun Pharma and Grasim. You also have the Nifty weekly contracts expiry, so volatility could spike towards the close of trade. And today is also the record date for the demerger of the lifestyle business of Aditya Birla Fashion and Retail, ABFRL. So that's what I'm watching. Nigel, what about you?
Well, that's right. Let's take the top three cues that I'm looking at from the global perspective. It was a bit of risk-off that played out overnight. That's why you did see that gold prices did spike up overnight. And after seeing a bit of a dip, it's pulled back very, very swiftly. The problem for global equities is that the US bond yields, the 10-year in particular, that's moved up in a matter of a month when it moves from around 4% to around 4.6%. That's a reason to be a little bit cautious with regard to the global market scenario. However, the dollar index cooling off, it's good for emerging markets, India included as well, particularly with regard to the flows picture. And after selling, it's good to see that the FIs return back to the buying list. Now, the Nifty is going through a brief phase of consolidation. And in this phase of consolidation, the clients that were net short, they gradually turn net long. And now, in fact, they're building on those long positions. The last count we have, clients are net long with close to 44,000 contracts on the long side. FIs, they're on the opposite end of the spectrum, not moved too much overnight. So I'm giving you the absolute number. They're net short by close to 38,000 contracts. This is not such a bad combination as I've been saying for the last many days. What about the options data? That becomes extremely important because today is the weekly expiry. You had some put writing that we saw yesterday, and the close actually was quite strong. We'll give back some part of that, what we put on yesterday. But you had the 24,800 put, 24,700 put as well, both of them seeing a fair bit of open interest build up. And the PCR is at the lower end of the band at around 0.8 or thereabouts, which brings us to the level. Since you saw writing at around the 24,700 put, premium roughly around 70, 80 rupees or thereabouts. So you're looking at the 24,620 level. Holding out, at least for today's trading session, a little lower than that is where the 20 DMA comes in. That's around 24,500 or thereabouts. But for today, you don't want this level to get breached. If you want to get some confidence with regard to the up move, you like to see a higher high. And that's the level that I'm looking at. That's the high that the Nifty made yesterday, around 24,900 950 or thereabouts. Remember, we are facing resistance at around 25,100. But for today's trading session, that's the level I'm looking at. The Nifty Bank, that's going to be the swing factor. IndusInd Bank reported a weak set of numbers. It'll be interesting to see whether some of those flows start moving to the larger, better banks as well, which may not be such a bad case for the Nifty Bank on the whole. So the resistance that we have, ran into the last many trading sessions, on the upside, 56,000 odd. On the downside, you don't want this 54,500 odd mark. So we're going to start off in the red. Volatility picks up in the second half of the trade. But I think if we can get through a couple of hours of trade, maybe in fact the bulls will fancy their chances if in fact the 24,620 level does hold out.
All right, Nigel, thanks very much for that. So that's the levels and the futures and options data, which is important to track as well.